Hello, today is New Year's Day, January 1st, 2025. We always start with our disclaimer. We'll go over our calls. We'll make our predictions, and since it's the end of the year, it's traditional to give a longer-term forecast. We'll do that after we give another caution first, because longer-term predictions are not as accurate as shorter-term predictions in my experience. Okay, well, here's what we said. We said that the commonest thing was a gap and a prompt move outside the day's range. We gapped, but there was no prompt move outside the day's range. Next most common was the close little change, big move the next day. That didn't happen either. And least common by far is neither one of those things happened. Well, neither one of those things happened. We had the early low. Thursday should have the early high. What we did have was a wall with gap pattern. Short term it's positive, but longer term these gaps fill pretty soon, and there's support under the origin of the wall. That's going a bit further than I'd like to see us go in terms of points, but in terms of percentage it still is a support area. This is Tom DeMark's TDST line. We're there once again. We're at support. Now, support extends to one full bar under the line. Just remember, we've had a straight line move down to a support area. When that happens, either you gap under it or support wins. So if we're going to continue dropping on Thursday, we need to gap under these lows and maintain it. And while that's not impossible, I think we had plenty of opportunities to break below, and we didn't. Now, time hasn't run out. If we gap below, then fine. Otherwise, at least this test of support seems to be holding, depending on how we open on Thursday, and there could be a bounce, even though eventually, when you've tested support that many times, eventually you're going to break through on the downside. Well, we broke through this red trend line. That should take us at least 300 handles under the line, according to Tom DeMark. We're not there yet. We're at this gray trend line. If we gap under it and maintain the gap, we have even lower targets, but of course that hasn't happened yet. The point is, no matter what happens on Thursday, this drop is not over. It's kind of tough to count these waves. Let's start with a longer term count, and then we'll come back to this picture. There are two different ways to have us start wave magenta 2. I mean, you could have it, this is the height of magenta 1, and if magenta 2 starts here, you could say that 3 is just about equal to 1. I think because of this ABC relationship with good fibs, if we start counting wave C is ending here, which is 52.6485, that there's a much better fib relationship. And so I prefer wave 2 ending here, where ABC has good fibs and what I'm calling wave 3 and wave 1 have good fibs. Now this is one of the strangest wave 3s I've ever seen. Normally it's a strong impulsive move. Normally it's longer than wave 1. And normally it doesn't look like a rising wedge, so it could be just one of 3. But because there is a Fibonacci relationship, we have to consider the possibility that that's wave 3 itself, and a rather unimpressive one. Well, this is the count I've been using. We have an ABC here, A, B, C. This wave A has a height of 909.30 points. And when you take 786 times that and measure from this high, you get this C bottom on the nose, which we call right when it happened. And then you have to see if you're counting 1, 2, with this being 3, as we just said, or if we should use this. The point is, this just isn't a very impressive wave 3. Let's take the same 909.3 handles. When you draw this line, it's a good fit, with good fibs hits at the 50%. Here's your 78.6 and 127.2, and the 100% hit is at 5190.67. Come back to that. Well, how can you explain a move like this, which is so weak? One way to explain it would be if we're making a leading diagonal triangle. Then this wave 3 doesn't have to be strong. And if that's what this is, we're going to get a wave 4 down, which should overlap with the top of wave 1. And the top of wave 1 is 52.6485. So, if this is a leading diagonal triangle, and we get 100% of that move, we'll just undercut it at 5190.67. And that would explain the weak wave 3. If we do stop there, wave 4 would have a good Fibonacci relationship to wave 2. I mean, if wave 4 ends at 100%, wave 2 would be 78.6. It looks like kind of a long shot to me, because to complete the pattern, you'd have to get wave 5 truncate, so it wouldn't be so that wave 3 wouldn't be the shortest wave, but it doesn't break any rules. It explains this action here. Doesn't mean it has to work. Well, right now it's kind of tough to count this. We have this A down starting from here. We have your B. Now you can have this as an ABC to form wave blue B. If this is A of B at 61.8, and that's B, and C is equal to 100. So I think we have an ABC pattern. And if this is blue A and blue B ends here, you like blue C to end of the point where green C would have a Fibonacci relationship with green A. Well, if that's green A, starts where the ending diagonal triangle ended, and that's green C, it ends around 57.90 or so. Let's make this red. And then if you take blue A of green C instead of the 78.6, you get around 57.90 again, so there's wave balance on the downside around 57.90, which is a reasonable target for the end of this drop. And 57.90 would satisfy the 300 handle drop. So I think that's a very likely place for it to end, but again, it's not the only place. Now what does MEJT have to say? Well, during the year we had 6 targets that didn't print, and they occurred over 6 weeks. We've had 40 targets which didn't print from 2002 to 2022, and all of a sudden we have 16 targets that didn't print in 2 years. I don't know if any of these targets from 2023 are ever going to print. But here are the 6 targets we have from this year. I think eventually these higher targets will print because eventually the market's going to move higher. That'll take us down to 4. But if we do trade back at that 51.90 level, we'll knock these 2 off the list too, and you just can't rule that out. Thursday's pattern has the early high regardless of where we open. We've dropped the support in the straight line. If the decline is to continue in the beta, we should cap down under recent lows. We have plenty of opportunity to do that Tuesday, and we didn't. Those lows should break eventually. The first 1 to 2 trading days of the year often go counter trend. Thus, while gapping down can't be ruled out, I think we have a decent chance of trading higher Thursday, but any rally here should be doomed to failure. The break of the TD trend line justifies a drop of several hundred points, likely taking us as low as the 5600s basis cash. I'd like for that to be it on the downside, but if we completed a rising wedge, and if we're making a leading diagonal triangle, we should bottom under 5200 cash. I frankly think it's kind of a long shot, but I can't rule it out, no matter how unlikely it seems now. Once we correct in the early part of the year, I think the rally is going to resume. Most of the gains may not come until 2026. Please take any longer-term predictions by me or by anyone else with a grain of salt. The longer term any prediction is, the more likely it is to be wrong. One of the most accurate longer-term forecasters I've ever seen was Ken Fisher, who used to have a column in Forbes magazine. His method was to take everyone else's end-of-year prediction and pick a price as far away from the majority of them as he could. And that would be his prediction. And he was sometimes amazingly accurate. Mark Colbert would analyze people who would charge for their advice, and the number 1 market timer he had was wrong 30% of the time. Now, when it comes to short-term trades, I don't make many mistakes, I don't think. I've had a bunch of moves I missed. I've had a lot of moves that got canceled before they opened. But as far as making a call that was wrong, I don't think I've made too many. So when it comes to longer-term predictions, I don't have the same indicators. They're just not the same indicators. So you can't expect the same degree of results. So just remember my disclaimer. Remember, long-term stuff uses not the same indicators I use for my short-term stuff. My short-term stuff says we either gap down or trade higher. And longer-term, the decline's not over. Most likely targets in the 5600s cash, but I can't rule out trading under 5200, and that's today's call.